Hello, everybody. Welcome to the Build Weekly Roundup. It's week 42 of 2025. We've got a set of really kind of topical items for you this week that I think you're seeing across the news, every headline. First off, we'll kick things off with the debasement. We're calling it the debasement awakening. You've probably seen things in the news related to the debasement trade, and I'll let Matt kind of explain why he's calling it the awakening instead of the debasement trade. And then from there, we'll move on into kind of what's going on with Venezuela, news you're hearing about China, and how it's all interrelated. And then finally, there's a set of upcoming kind of dates that we want you to keep in mind on the calendar. So, we'll make sure we get into kind of these key dates for this upcoming, we're calling it the ball window, but this window of time where there's several events that we think are going to be pretty important, impactful to markets. So we'll start there, Matt. Debasement awakening. I hear a lot about the debasement trade. People are kind of saying, hey, maybe people are realizing that inflation is going to be a continued problem. Things are going to be, maybe getting worse out there economically. And so they're deciding to then go into trades like buying gold or things like that. So, maybe explain for people what is the debasement trade first off, and then what are you seeing that makes you call it an awakening?
Yep. Well, for our three followers and viewers who watched about a month or so ago, we went into the kind of the monetary and credit cycles background with that author Gordon Pepper, Money, Credit, and Asset Prices. And I won't go deep on this here, but basically what you see as the dollar cycle tightens up, people start to stretch into more and more risk, right? Rates come down. They tend to come down because there's more supply of money than there is demand from borrowers for financing in the money. So less supply, less bonds or credit origination out there. Borrowers kind of pulling back as risk starts to really materialize. They don't want to take on additional debt or borrowing. That supply of money that exists from savers and other pools of capital tends to bid up and flow into bonds themselves. So you'll see interest rates come down at this point in the cycle. But the first leg of this behavior, typically what you'll see is those same savers who became used to the interest income or the returns from dividends on their investments in that prior period, or you just call it a market stretch, they'll start to go further and further out on the risk curve to get their investments to generate kind of the income that's necessary to keep sustaining the lifestyle that they've locked in, essentially. And so when we talk about this debasement trade, when it shows up on the awareness, we have Google Trends data, and I'll go to that for public sentiment. But what I want to get across is the actual debasement trade was taking place during the markup, right? The actual debasement of gold, of the dollar in gold terms, was when price moved up from a $2,000 level, which was resistance for 3 years, 2020, 2021, 2022, most of 2023, broke out from $2,000 and has shot up to $4,200 and, change per ounce as of, the time of this recording in mid-October. That itself was the debasement, right? The markup is the debasement. Now, when the public finally realizes, hey, I'm catching on. Hey, there's a debasement going on. It tends to be after the fact. And once you start seeing this in financial media, mainstream, CNBC, Wall Street Journal, once it starts hitting those headlines, and maybe you'll start hearing your siblings, your mother, your taxi driver saying, "Hey, I'm gonna sell out of my dollar savings and buy gold." That's kind of the point in the cycle where it's reached the trade itself, which was occurring over that markup period, is at the point where it's reached kind of broad public participation. So the fact that we're seeing this now, the financial media is always going to give the market participants what they want, right? If they had tried to market the debasement trade back in 2023, right, no one would have listened. It wouldn't have gotten clicks, right? You couldn't find anybody to buy a gold miner,
Like, why would I
let
waste money buying gold miners? Yeah.
yeah, it was hated. No, you can't do it. Versus now, they're getting bid up. It's a crazy bull market, not just gold miners, silver, other precious metals, platinum, palladium. It's spilling over into industrial metals. So if you look at gold price in orange, obviously you see a chart that's up and to the right over the course of the last 20 years, where we have Google search trend data, which tells you where the public is, where the level of public interest in this debasement term shows up. Key thing here also, I want to call out, debasement is not a standard word in most people's lexicon, right? I think if you could do some studies, it's like how many words does the average American have in their you know grammar vault, right, to pull from? Probably 1,000, couple thousand, right? Debasement is not going to be one of them. It's a word you don't typically see in everyday life, right? Like the noticing of currency debasement. Um, the fact that it spikes and everybody researches it really is your signal of kind of the public participation phase occurring in this phenomenon that's taking place. What do I mean by that? So prior peak of this debasement term, it's actually in terms of Google Trends, Americans searching for this terms, we've actually got a higher high in terms of public interest in this word, in this phenomenon. This was during the peak gold market after the 2008 GFC, and we'd done 2 rounds of quantitative easing. Remember, back in those days, we saw gold shoot up in peaks right at about $1,800 is where it topped at. That search interest in the debasement term, we get the laser pointer. It shows up right here, 2012, mid of 2012, after the top in the gold price in that post 2008 run up had already occurred, right? So the public comes in late, is typically how this works. They're the followers. They're not ahead of the trend. They're not the high conviction players who were buying gold miners back when no one wanted them. You couldn't give them away. So the fact that you're starting to see it show up now, the financial media is going to give the American investing public what they want. This is a good indicator of where the market cycle is. Now, it doesn't mean that gold price can't run up further from here, but the fact of the matter is that the new entrants to the debasement trade, pulling into gold, you could say pulling into Bitcoin, pulling investor awareness into Bitcoin, on top of this narrative, generally tends to fall with market types, market cycles where you're looking at a distribution phase. And what do I mean by that? It means this is where the smart money, the players who are the market participants who are savvy and sharp and were buying low back when no one wanted something, they will distribute those shares into kind of the public euphoria. Is what happens here. Doesn't have to work out this way. Maybe we do want to keep gold, marking up higher, keep Bitcoin setting all-time highs, all of the above. Could happen. But the fact that we're starting to see the public broadly aware and entering kind of a sense of euphoria and desperation, it's a good signal of where we are in the market cycle.
I think it's really interesting to see that, like, your green line here with the arrows on the left hand side of the chart for our audience. That to me is so clear of showing the actual debasement happened, and then people start to catch on late.
Yep.
It's interesting to see the actual data here lined up like that. So
As always, public is the last to know. Um, just how it works.
yep.
Um, the spread of information. All right. So Message, only thing I want to get out there, be careful. All right, so let's go to the theme two. We call this food for rare earths. Let's get into this. So last week we saw like further, actually the return of the escalatory ladder being scaled in this global conflict, I'd say, or international trade conflict spills over in international finance between the regional powers, and key among them is US and China. Catalyzing event here was the agreement between the US Treasury and the Argentine government to do a currency swap bailout. What that means in the broader scheme of world trade and like the 500-year narrative that we're riding on um, in terms of, let's say, globalization, trade between these regional powers, settlement of the new world, the Western Hemisphere, North and South America. All of this is in play. But right now, we're like what we've seen starting last Thursday, that Argentine US deal that kickstarted a series of events. And you see these two governments, the uh, CCP under Xi Jinping and the US administration, spearheaded by Donald Trump, but really you see the implementation falling on other parties, like Scott Bessent, heavily involved as the key player on the financial side in these developments as they shake out. But in response to that Argentine US deal, immediate reaction, like within the hours, was China's retaliation to enforce export controls on rare earth elements, critical to global industry, international trade, supply, anything, 21st century technology related, you got to have these rare earths. That was a step of escalation. What do you see as the next step from there? Trump's response, this is where the headline comes up. Trump threatens to cut off cooking oil trade with China. You're like, cooking oil? What's that? A knife to a gunfight? This is actually an escalation, even more so above rare earths, in my opinion. So rare earths, you could say with that one, your whole like China is its escalation was to threaten global supply chains, hold modern industry hostage essentially. What Trump's doing here, taking the fight to cooking oil, now you're going into the food supply, right? And so rare earth elements, definitely defense critical, food scarcity.
A little bit more
That is
base
a
on the Maslow
serious,
hierarchy of needs.
yes, exactly. And so if you look at what is the CCP's Achilles heel, it's always food security. If you think about it, you've got over 1 billion people to feed. They are not internally sustainable, right? And I'll go into the economics. If they wanted to get the billions of people that they count among their population to basically feed themselves on dry rice, a very subsistence level diet, they could probably do that on their own and be internally self-sufficient. But if you want to give your people actual food that they're not upset about eating, like gruel, um, like give them food, give them spice, give them meat, build up that like this middle class lifestyle that the Chinese population has grown to be accustomed to over the last 30 to 40 years, and the Deng Xiaoping and following era, they have to have the new world countries, North and South America, involved. Now, what do I mean by that? You've got two critical dependencies, right? So internal to China, they can produce rice, or pull it in from their rice producing Southeastern Asian country neighbors to import rice products. That's fine. Other kind of grains, wheat, etc., they can pull those in from the global market. That's fine. What they can't, and also meat. They've got their own meat capacity roughly. They're only 6.5% import dependent on meat. So nearly 94, over 94, 93% internally self-sufficient on meat if you just look at meat as an output alone. The thing is, to get meat as a finished good, you have to feed your livestock something, right? What is that something? It's soybeans, right? So like you can't sustain a herd of cattle and or lean hogs on rice, as far as I know. Your typical kind of meal product for the livestock herd, it is dependent on soybeans. That's where you get into this soybeans issue. China is 83.6 dependent on imports as of 2024 for its soybean imports. Without the soybeans, you don't get the meat to feed your population and higher quality, sources of protein. And in terms of level, China needs to import 105 million tons of soybeans to keep this food supply humming along. What's the next most critical import? Edible oils. These are your cooking oils. They're nearly 70% import dependent. So not just to get the food, get the meat onto the grocery store shelves, you also need to be able to prepare it and kind of a complementary good and a critical complement to that meat production or your food supply uh, is cooking oils, right? You can't prepare them and finish, meals. So unless you want to feed your population on gruel, these are the Achilles heel of that the CCP is looking over. Any questions there, Cameron, before we go into
I mean, what,
the
yeah,
nitty gritty?
one that I have here is really just, it seems to me like cooking oil is something that you could find other places potentially, right? So to source from. So what specifically about what's going on with, or I guess, how does this tie to Argentina specifically?
Yeah, I'll get into that. So actually, to import cooking oils, like it's got to be an edible oil, has to be plant sourced. You're looking at olive oil, vegetable oils, derivatives of soybean, corn, whatever. So it comes down to the agricultural commodities. China, it's, the land that it occupies, it's not good farmland. Um, if you look at the amount of, we'll get into the soybean exports here next slide, or soybean production and import export tables. They don't have the massive amounts and abundance of arable land that exist in North and South America in particular, and their own land that they have, just because of climate, all these other factors, it's less productive than the farmland in terms of output per acre than what you find in North America and South America. And so you add those up, it means your cost of production. International trade is all dependent on marginal costs. What you're supposed to do in the kind of the Ricardian framework, how you build the wealth of nations, you produce what you have the advantage at in terms of a cost structure, and you export that to the rest of the world, right? And from China's perspective, it does not have a cost advantage in food, and it has over a billion people to support. And the key eras of international trade where China is able to export into the international marketplace for its goods is primarily what it delivers. They're very proficient as a culture at delivering manufactured goods. I went to Hong Kong in August and went through the art museum, and you just see it in the culture. Like it's all factories. Like they're very proud of. You'll see silverware produced in the 1800s, just insanely detailed silversmithing. So from export products, porcelain, silk, silver, etc. Like they're just a very highly proficient manufacturing culture. That's what they deliver. But then when they're able to export those into external markets with demand, those windows tend to correlate with um, them being able to acquire foods. among other things that they need internally. And that food availability leads to a surge in population growth. So right now, where we are in Chinese history, obviously we're riding on 40 years of export growth. That's led to economic growth in China on a 40-year secular boom. Um, they've been able to import the foodstuffs they need to kind of feed and supply this population that's itself gone through a boom over the last 100 years, ever since the kind of the famine of the Great Leap Forward. I think it was like 1959, 1960, 1961, if I have my years right. Worst famine of the 20th century in terms of number and just depths, like the percentage of a population um, that was impacted. But after that, you saw that a population boom. If you don't have the food supplies, and this has been something that's existed throughout Chinese history. They've been through these cycles before. If you can't feed this population and sustain it, then you run into problems, right? And so this is where the dependency on soybeans and oils and all the other uh, imported products that it relies upon. And you can think of the soybeans are the base layer collateral that allows the finer proteins, the meat, the animals, the livestock, all of that to to become realized, right? If you pull that Jenga block from the bottom of the tower, you're in a serious problem internally with China. So we're at a very uh, high volatility window here. We'll, in conclusion, talk about what's coming up at the APEC conferences in South Korea, October 31st and November 1st. But the stakes are high at this point in the game.
Yep.
Any comments there?
Yeah, and so then, you talked about it. So I get it. Argentina extremely important to the soybean market, but maybe walk me through how is it actually, you what is the breakdown of that soybean market, maybe by metric.
Yep.
There you go. Yeah.
Yep. Here we go.
And why? So where I was getting at with this was, why is it that Argentina is so important when I see this slide, for example, and it looks like Argentina only produces 11%. Couldn't you say, hey, Brazil, we're gonna actually go buy up all your soybeans, send that over here to China?
That's already happening, right? So you've got a clash of regional powers here. Number one and number two, however you want to stack rank them, are now in conflict, and they have been since, I mean, you could say 2014 at the minimum if you just keep rewinding the tape. But what you're seeing here, United States and Argentina, number two and three soybean producers, they just have a ton of arable land. That's the new world. Brazil is in first place. This has come through, 20 years of deforestation, development, and kind of seed development and genetic engineering to increase their own soybean harvest productivities, yield per acre, bushels per acre types of output. First thing to get across. So you've got 80% of the world's soybean production comes from those three countries, Brazil, United States, and Argentina. And so what you just see with the US striking a deal with the Milei government, right? They're now in the same club. Like they're cooperating. So you've got number two and three who roughly now account for the same level of output as number one. Now, if you look on the export side, US does consume a lot of its soybeans. We produce our own food supply, et cetera. So if we produce about 118,000 million tons per year, we export about 47.5 million tons of that. So in terms of share, yeah, less than half. So we're able to ship those exports. Those go on to the global market, and that's for other countries to feed their own populations. Argentina doesn't actually export hardly anything in terms of soybeans. They're internally consuming all of that. Mainly what they would do is, hey, feed the livestock, and then you export a higher value good onto the open market in meat products. So Argentinian beef kind of viewed as very high quality global. That's how they actually implement this economically. You see Brazil exports a lot of soybeans. They account for 60% of global exports. So what you can think about this is the secondary market where countries can go to buy the commodity. Brazil is over half. They are the marginal producer. They're the Saudi Arabia of soybeans, right? Now you look at China, what they're doing. So China consumes 133 million tons annually of consumption. They're 31% of annual consumption of soybean production, which I benchmark that to the global population. It could be roughly indexed to population share, right?
Sure.
Billion and a half people, somewhere like that, 8 billion people in the world. Maybe they're slightly punching above their weight, but they're proxying about that. They'll punch above their weight in terms of just share of global headcount, um, a more wealthy economy at this point. But China, of that 133 million tons a year, they have to import 112 million metric tons. And CFR, remember that slide before? They said 105 million. This is the USDA's estimate for 2025, 2026. So that's where they see it. So roughly same or similar ballparks. But basically, what this shows you, China's food stocks, like they're entirely dependent on Brazilian soybean exports. So now you see number two and number three, US and Argentina, they're moving towards cooperation, right? We can go through the long form of Argentina and its political developments over the last 300 or 400 years. We don't have time for that today. But the TLDR version of that is with Milei, you're seeing the internal governance faction that wants to align more with the United States and the Anglo-Dutch. You can think of it as like the Commonwealth countries framework world. That's the direction Argentina is moving. This is a process that's been underway ever since the Spanish colonized Buenos Aires in Argentina, like 1500s, 1600s, and it's been slowly migrating towards the Anglo-Dutch direction. But in my framework, that's really rolling up now to the U.S. now leading that coalition. So what that deal was last Thursday was basically Argentina entering the U.S. sphere of orbit. U.S. is now its long-term partner. That's the wagon that at least this Milei government is saying they're hitching their horse to,
Got it.
or hitching their cart to, the horse. And we've got the election coming up on October 26th, the Sunday after this one,
That's right.
which is where the people will decide which direction they want to go. The Peronist route, which is kind of domestic, nationalist, 100 years of futility, hyperinflation, et cetera, or do they want to do this new Milei economic policy direction? So that's a huge election coming up, and we'll get into the sequence of events kind of discussion to conclude
Yeah,
this
yeah.
out.
And so
Yeah,
then, the thing that jumps out to me right away here is, like you called out, Brazil, number one on both production and export. So that then leads me into what then is the US trying to do with Brazil then?
this is where, so Brazil's got a huge election coming up in October 2026, and this is going to be like the key. They're the key swing state. When you think about U.S. elections, what are the key swing states? We all know there's only 5 or 6 that actually matter in every election the last 20 years or so. In the global power context, say there's a state and which side it flips to and aligns with can tell you where the balance of power goes between these regional power blocks, the ones that we've called out that matter. You've got the U.S., kind of representing North America and also like being the banner carrier for the Western Hemisphere kind of block of countries in general. You've got China representing Southeast Asia and its own sphere of influence. You've got Russia representing the Northern Eurasia. And then you've got Europe, who are probably, in fourth place, like to be honest, in this regional power conflict. Not big enough or strong enough anymore to carry things. But if you look to who is the key swing state nation, I would say right now it's Brazil. Brazil's got, as we just showed, they've got the soybeans that China is dependent on. They've also got rare earth deposits that can solve the key Achilles heel. On the other side, we talked about China and the food scarcity being its own internal Achilles heel. U.S. economy, what they're lacking is actually these rare earth minerals, right? There are some deposits in the U.S. We're seeing those kind of spin up and go from, greenfield projects into production, and that's where you get the developments we've seen since the Liberation Day tariffs went into effect. What do we see? Like MP materials deals, like the U.S. starting to develop its own resources and inside of its domestic lower 48, as well as, across North America. And then into South America is where these things are resource rich. I didn't put this on the map, but you've got like a ton. Like if you just look at the dots on like where a high grade deposit exists for like a key, like a critical metal for that goes into the global economy and the supply chains, just look like in the coast, that little stretch of mountains from the Rockies starting in northern Canada, going down all the way. And then like it's kind of the same mountain range almost just turns into the Andes. Like it is just loaded with metals deposits. These projects, these are new world, there's only 500 years of history here, a tiny fraction of global population, tiny fraction of capital base outside of the U.S. That area is kind of the resource-rich deposit that everybody globally is going to be, attracted to and fighting over, in my opinion. So you look at Brazil, it's the critical swing state in terms of food supply, but it's also got rare earths, which if you think about BRICS, like the coalition of countries that are working together, Brazil, Russia, India, China, Brazil is leaning into the orbit of those other two regional powers and trying to play itself off of kind of the US and the Anglo-Dutch led kind of faction that's fighting for control essentially of the Western Hemisphere as its kind of regional power block.
Got it. And so
All right.
then, let's talk about then, as we're talking about power struggle, you had a slide in here that I thought was really interesting, which is a map of all the military bases
Yep.
across kind of that like northern Latin American continent. So maybe
Yep.
explain why you plug that in here.
Yeah. So first, like one other thing I want to get to.
Oh, sorry.
We're all aware of the story, like post 2008 GFC. 2 years ago, we were talking about the Evergrande real estate bubble, the Chinese, credit collapse coming from all of this housing build out for a population kind of increase that never came, right? Why did it not come? Well, your bottleneck is your food supply, right? And so, what you're looking at here, one, it's an example of malinvestment, but you can't actually fill your economy into that without your food supply, your food security needs shored up. So internally, China's at an interesting spot. As much as the West, we're coming to like our media narrative, and if you look on X, this is what you'll find: China's eating our lunch. U.S. and the West, we're in a sovereign debt, you know, flywheel, bubble, collapse, all of that. Well, China's like, my point here, talk about US, their critical dependency on rare earths and the debt problem that's materializing in all your G7 countries. That's serious. Yes, that's something to be dealt with. But China's got another, like, it's got its own problems, is just what I want to make people aware of. So this housing, the real estate bubble, all of these property developers that have, went through the boom and bust cycle. They started letting some of those credits go bad. 2022, 2023. It's not done yet. They're gradually maintaining or trying to like slow down the pace of that credit contraction effect. My point here is without this cooperation from Brazil, it's really hard to keep their plate spinning. Um, so with this deal Thursday with the U.S. teaming up and Argentina aligning itself with the United States power faction, you kind of see why Xi and the CCP took this like retaliatory step, like a lashing out to the degree that they did on Thursday. It is that critical to them. All right. So my point here, all right, if there's a war, everybody thinks there's going to be a war between the US and China that takes place in Southeast Asia, right? This is going to be over Taiwan. Maybe. That could be the case. But where China's actual core dependency is, like you got to be able to feed your population, let alone feed your army. Um, and the food supply comes from increasingly South America. My point here, China could it would be next to impossible for them to maintain a war. Like if they had to defend their breadbasket in Brazil, if they had to, it just won't work. So there's like you've got 18,000 nautical mile, supply chains, no naval bases for, the Chinese Navy to resupply, rearm themselves, etc. It just wouldn't work. It'd be like one example of this is the Russo-Japanese War in 1904, when the Russian Navy went up against the upstart Japanese Navy. Everyone expected the Russians to crush them, right? Just because, like, you look at the names. Russia was a global power at the time. Japan, no one knew them, kind of coming off of centuries of isolationism. But if you just look at where this war took place, like the Russian fleet had to traverse all the way around Africa with fewer ships, no naval bases to restock, tens of thousands of nautical miles on the journey to go up against the Japanese fleet in their own backyard. Like this war was over in one battle, right? Like the Russian Navy just got destroyed. And so the point there, if you don't have naval supply lines and you're going very far away from your home ports, like you can't win. Like it's just not going to work. And with the U.S. perspective here, yeah, you've got ground military bases. There's dots all over this map. But the U.S. naval fleet kind of operating out of Southcom, Southern Command in Doral, Florida, projecting out of the Caribbean as its, home base of strength. This is not an option for the Chinese. Like you can't take a war to South America and expect to win. So their food supply, that is the Achilles heel I would go after with this. And so if you're thinking about even projecting aggressiveness into the South China Sea as they've kind of been building up, the CCP has been building up over the last 10 to 15 years. You've kind of got a natural bottleneck here. Like you're totally dependent on Brazil and those food supply lines to keep your plate spinning in the air. It's going to be real hard, is my point. So U.S. like the rare earths are actually kind of misnamed. They're not altogether rare. It's the production and refinement that is the rare part here. The rest of the G7 countries, they don't have most of their deposits that are identified aren't actually spun up and in production. But on top of that, we don't have the refinement facilities set up to generate these things. That's a problem that can be solved in 5 to 10 years. It just takes time and capital and higher prices to make it economic for the U.S. and its friendly countries. But that's an altogether different problem than needing food and not having it. I guess full stop. So if you look at what this Argentine kind of reaction is about, go back to 2023. China was pressuring Argentina heavily to build a naval base at this Tierra del Fuego location. That was before or early in the Milei, prior to the Milei elections. So this is the Kirchnerists in power, kind of the carry forwards of Peronism. But they wanted to align themselves, or that this was the devil they were choosing, align themselves with Venezuela, align themselves economically with Iran, and ultimately what that means is aligning yourself with deeper economically in terms of integration with the Chinese. The Milei administration is the opposite of that. They're aligning themselves with the US and the old kind of Anglo-Dutch kind of trading network that really, if you just look on the map, Commonwealth countries, the key ports, key financial centers, that's the power block that Milei is leaning Argentina toward. So we'll find out which direction this takes on their October 26th elections. We'll go into those in a second in terms of what the prediction markets are saying they expect to happen. But this was a July headline from this summer prior to this $20 billion, USD swap line for Argentinian pesos. The U.S. Talks to build this naval base in Tierra del Fuego are advancing, while the Chinese kind of desires for that project are basically dead in the water.
So you're seeing the interest basically of why, why is this $20 billion swap line, I think maybe 40 now, why is it so important? You're actually seeing that
Yep.
play out in real time.
Yeah. And this is where the talking heads on Bitcoin, Twitter, you follow them. This is dumb. Why are you buying the Argentine pesos? I'm sorry. There are certain things right now that you can only buy in the fiat nation state currencies. I know there's only 21 million Bitcoin, and over the long term, that will matter. But in terms of what you need now, what you need today, you can't buy this naval base at Tierra del Fuego for Bitcoin. There's only one thing you can buy that in, and you got to get it. You got to give this Malay administration, buy their Argentine pesos. They'll take your dollars, and that'll get you this naval base. But it's a matter of seeing the forest for the trees. What can you buy now with Bitcoin obviously coming to the fold down the road? But that time, we're not there yet.
Got it. And
All right. And then next you see, all right, how do you know this thing is already turning into a military flight? Like this is getting kinetic. And this is where you see the headlines that are dropping. And it's tough to take all these news headlines and piece them together into an integrated whole to understand the context of what the heck is actually going on between these great powers. What we've seen with the Trump administration, the speedboats that it's taken out, satellite guided missiles, all of that. Yesterday, we got the headline that Trump had authorized the CIA to take on the ground paramilitary action in Venezuela. Point is, the kinetic war is now shaping up in South America, like it's naval, in the Caribbean, it's onshore as well. Land combat is going to start taking place as this situation just continues to escalate.
yep,
And with Venezuela in particular, Guyana, the neighbor, this one's about energy commodities, oil that's being developed. We won't talk about that here, but South America is a key battleground in this regional power conflict, the multipolar world that everybody's well aware of. But this is where the action is developing.
yeah, definitely a little bit of posturing as well to announce this publicly that you're going to let the CIA go in, or the CIA has been in Venezuela. So you're
Yeah.
definitely seeing that. All
This
right.
also explains fully why you have Marco Rubio, Latin American, descent, Spanish speaker, to interact as your Secretary of State for diplomatic relations with all of these key players, like in the Latin American world. That's why he's there.
Absolutely. Okay, so we
All
are
right.
running a little bit long here, but let's jump into kind of what you called kind of vol week, vol window. We've got a couple of key events that you've already kind of highlighted prior in the episode, but walk us through kind of what this next set of weeks look like and the key events within them.
Yep. So we've got 2 weeks of key events that we need to get through. We need to see resolution. When I say we, the key players involved need to mark their, like, they need to see what their cards are worth right now. Lay your cards on the table for this hand, and we're going to see who wins the hand, right? And all of these players are basically going to see that. They'll come to a determination what they're holding, and then they'll get mark to market, and then we'll be out of this. But while these dates are coming up, expect volatility to happen as essentially market to market and price discovery takes place in commodities and asset prices, but also in the hierarchy as this multipolar kind of confrontation takes place. Who's got the upper hand? Who settles out? And then you rinse, repeat, and play again until this is all over, which could be decades from now. But over the next week, so starting Saturday is when this kicks off, you've got this one's internal with the United States. You've got another No Kings rally. If you remember, the first one of these was spun up in June. I think it spans multiple countries, but this is like all 50 states. It's an astroturf political rally kind of effort to get people out on the streets to see internally what level of kind of opposition there is to the administration in power. So everything going on, we've got the shutdown in place, all of that effect. This is the Democrat side of the shutdown, and in my point of view, like just reading between the lines, they need to see how many people they can get to show up out on streets across all the major cities in America to get a sense of how much kind of tailwind they have and support they have from the American public for their own agenda. So we'll see that on Saturday if these No Kings realities are, if they deliver or if it's a bust. That'll tell Chuck Schumer and Hakeem Jeffries and the people who they work for to what degree of support they have in this shutdown battle, right? So the shutdown itself, that thing's just going to continue. It won't be resolved at least until these results on Saturday come in. Now, just a little bit of color here. The irony of No Kings, right? You actually have a king in the British. Yeah, and if we're actually going to protest against a king, like why not make it a real one? Just leave it at that. All right. After that, following week, Sunday, October 26th, we've got the Argentina elections. This is where the people are going to choose. It's a Republican structure, so the people choose their elected government. We're going to see which political party wins the seats in their version of House and Congress for kind of the legislative control of the Argentine government. Right now, you've got two parties, the UP, which is the legacy Peronists. You call them the Kirchnerists. It just goes through a different, you know,
Renames all the time.
individual behind the name. Yeah, exactly. But these are the Peronists, the legacy faction. It's the same old. Like everything Argentina's been doing and struggling for 100 years, going nowhere, run it back, keep seeing those crappy economic results, people suffering through hyperinflation, all of that. Then you've got the LLA. This is Milei's party. That's an upstart. I think he founded it only. It's in 2021. They don't have a lot of seats. They are nowhere close to a majority, but they have a coalition, right? So the UP itself no longer has a majority, so they can't control. And they don't have the friends in the coalition. They've kind of worn out their welcome after 100 years, and putting your population and your economy through a hyperinflation will do that. But they still have like 40%. They're the single biggest party. They just can't get partners to go along with them to get them over the hump and take control. Versus LLA, nowhere close to a majority in seats, but they have the coalition, right? And they're also, if you look at absolute number, which party gains the most seats in the election next week, So where the prediction markets are saying roughly the LLA is about a
It's
2-to-1
favored.
favorite over UP to incrementally take more seats. So in terms of first derivative, if you're looking at this over the long term, it's on the ascendancy. And what you're expecting here is second derivative, like the increase on gains. Right now, you'd expect that to increase as well. It hasn't been as wide of a lead as it looked heading into September, but that's where you've seen just these um, political developments kind of shape up heading into this big date on October 26th. And then finally, the result, Milei out as president of Argentina in 2025. The reason this would happen would be because the uh, the Peronist, the UP, take enough seats in this election to essentially form their own government. You're still seeing here prediction markets showing low odds of that. So you saw early October, it did spike. It went up to 20%. That kind of the LLP and its partner coalition would not fare well in these elections. But you've seen that settle down. So this is something to watch. China definitely has a horse in the race because basically, if you think about this like geostrategically, got the U.S. in the north. They own the Caribbean. They project naval supremacy from the Caribbean outwards, Atlantic seaboard, Atlantic coast outwards. Um, if you get this naval base at Tierra del Fuego, and you start to see it doesn't even have to be a US Navy showing strength, like over time, decades, the rest of this century, say in Argentina starts to economically thrive again like it did in the late 1800s and was, just on a tear. You start to see a pincher move now where you have naval supremacy lost from the north and the south, and then those trade routes in and out of Brazil, which you're critically dependent on for food stocks, um, are under threat, right? So China has a horse in the race. They can't let this Argentinian regime ascend to power.
Absolutely. And so then, what then? It sounds like there's a Trump G meeting possibly on the
Yep.
books for APEC, right? You mentioned that's coming
Yep.
up.
Yeah, if they still get along in 2 weeks, so this will be the Friday after those Argentinian elections, Halloween in the US. Trump and Xi are set to meet face to face at the APEC summit. APEC is the Asia Pacific Economic Cooperation Forums. APEC is a kind of an organization of all these member countries in green. You would think Asia Pacific would be Southeast Asia only. No, it's not. It's all the countries that are critically dependent on each other for international trade across the Pacific Ocean, which isn't just your Southeast Asian countries. It's also your Commonwealth countries, Australia, New Zealand, US, put Canada in there with the other Commonwealth countries, Mexico, Chile, and Peru are in this as well. So all of these are trade dependent on each other. Basically, they need to keep cooperating for their own internal, what would you call it, stability, right? So everybody comes here. These are key discussion meetings. What we're going to see with Trump and Xi, assuming things haven't gotten even worse than they are already, I assume them over the next kind of 9 days, the comments from Treasury, comments from U.S. representatives, and then China as well, try to tone things down, right? Try to de-escalate a little bit, but also show strength um, in negotiating position. So you're at a point where you've taken steps. You can't back down and show weakness at this point. Um, fully. Like the stakes are just too high. But depending on how those other two big events go from the U.S. perspective, right? The No Kings on Saturday coming up, 2 days from now. That'll tell you where we are in the domestic political situation and the government shutdown that's in place. And then you get the Argentina elections. Take those two things, and that will kind of set the tone for the Trump Xi meetings and broader US China discussions taking place in South Korea Friday and Saturday, October 31 and November 1.
Yeah, but an important slate of kind of upcoming events. I'm sure we're going to be covering in each of these upcoming weeks, with weekly roundups as well. So definitely stuff to watch.
Yep, I can go through predictions, all of that, what to watch for, but we'll just say this, like vol window could be high. Agricultural commodities are key. So any discussion and trade relationships, any actions taken that relate to, say, US heavy machinery manufacturers, like say John Deere, like those are all on the table. You also have seen discussions on price support for agricultural commodities markets like soybeans, for example, to come in for the U.S. government to come in and provide support to
Price floors, yeah.
farmers. And yeah, exactly. So all of those things are in play, but just watch for these headlines to continue to develop over the next 2 weeks is what we're watching for, and we'll comment on the as they come in every Thursday for you all. But I think the point to take here is just expect volatility, right? This is the window. This isn't the environment where equity markets go up, 1% a day implied vol. VIX is at 14, things are stable. This is when you're getting into the 20s, on VIX. You're in the chop bucket. This is where volatility starts to materialize.
Great. Well, thank you everybody for listening to this week's weekly roundup. Follow us, like, subscribe on YouTube. I'm sure you're seeing our comments or our posts on LinkedIn and X as well. So please reshare if you can. Appreciate everybody for watching, and we'll see you next week.